Welcome back to Essentials, where we break down the forces shaping our world. Today, we're diving into what might be America's Achilles heel: government debt and the US dollar. With me, as always, is my colleague Carly Jensen. Carly, welcome.
Thanks, Carver. Excited to discuss this critical issue. It can be rather technical, but I will try to explain it all clearly.
But first, this. President Trump has repeatedly threatened the BRIC countries, Brazil, Russia, India, and China, not with 25% or 50%, but with 100% tariffs on their products if they will not use the US dollar anymore for their international transactions. He is obviously very angry and probably worried as well. What is happening here?
This is exactly about the US Achilles heel, and Trump knows that. That is why he is bullying and threatening. Let me explain this to you, and I promise you, it will become very interesting.
Okay, where do we start?
There are two topics that are key in this discussion: the US government debt and the role of the dollar in the world economy. Let's focus on these two items, and you will understand it all.
Okay, well, let's start with the US government debt. The US debt has been rising for decades, but where do we stand today?
It's massive. As of January 2025, the US national debt has surpassed $34 trillion, with projections showing continued growth. This means that the debt is currently around 130% of GDP. The biggest drivers for this growth? Government spending on defense, social programs, and interest payments. Debt has skyrocketed since 2008 with financial crises, pandemic relief, and tax cuts. In 2008, the debt was $8 trillion, so it more than quadrupled since then.
That sounds unsustainable. How long can the US carry such a tremendous debt burden?
It depends. There are two main factors. Firstly, as long as investors keep buying US Treasury bonds, the government can roll over debt or issue new debt. This is important because these bonds will mature and the government needs to refinance the debt. Secondly, the government needs to pay interest on its debt. A larger debt means more interest payments for the government. The Congressional Budget Office warns that debt service costs could soon rival defense spending. This means that the US is spending more on interest payments than on its military. And also, Donald Trump can spend $1 only once. $1 for interest payments cannot be used for infrastructure or Social Security. But as long as the US pays its interest in time and is not defaulting, it works.
Let's first look at these investors. Who actually owns all these US bonds?
About 77% is held domestically by the Fed, Social Security, and US investors. Foreign holders like China and Japan own over $2 trillion combined. In total, foreign holders own roughly $7.3 trillion. This is roughly 23% of US debt.
Which countries hold the most foreign debt?
Well, Japan has the most, about $1.1 trillion. Then come China with $867 billion, and the UK with $655 billion. Relatively big are also Belgium, Luxembourg, Switzerland, and the Cayman Islands.
Why do foreign countries buy so much US debt, so much US Treasury bonds? Is that not risky?
Investing in the US debt is regarded as one of the most safe investments because of several reasons. Firstly, there is the idea that the US cannot go bankrupt because its economy is very strong and of the role of the dollar in the world economy. We will talk about that later. Also, the US have very large financial markets. There is always someone who wants to buy your US debt from you. And a third reason is the stable political and economic outlook for the US. But this argument is under pressure with Trump's chaotic policies and the rising polarization in the US. Would you buy bonds if the issuer behaves irrational?
Well, probably not. So, what happens if interest rates rise?
Then the interest costs for the US will increase. Higher interest payments could crowd out important spending on infrastructure, defense, and welfare. The US might have to cut spending or raise taxes, neither of which Trump is willing to do.
Higher interest payments could shake confidence in US debt, leading to even higher borrowing costs.
Exactly. And if you already own US Treasury bonds, you know that their value will decrease if interest rates go up. If the value goes down, you might consider selling your US Treasuries, and this would lead to higher interest rates in the US.
And with the second Trump term, what are the expectations for the US debt?
Expect more tax cuts, high military spending, and more tariffs. Historically, Trump has favored economic growth over deficit reduction. a higher budget deficit will lead to a higher debt. The Committee for a Responsible Federal Budget estimates that under Trump's policies, the debt could rise to 142% of GDP by 2035.
I understand that the US can sustain such a high debt because of the role of the dollar in the world economy. Can you explain how that works?
Now we come to the second topic that I wanted to explain, the role of the US dollar in the world economy. We can distinguish between two important roles for the dollar. Firstly, the US dollar is used for global trade. This means that countries and companies use the dollar for their international transactions. An example, if Thailand buys oil from Nigeria, they pay in dollars. Mind you, many countries cannot borrow money or pay for foreign goods in their own currencies. Everyone wants dollars because it is a strong currency. And when the US buys products from China, they also pay in dollars. As it is their own currency, the US can print dollars to pay for their imports. And many of these dollars do not go back to the US because China will pay Nigeria for their oil with these dollars. Because China receives these dollars from the US, the Chinese central bank also buys US Treasury bonds and keep these in their safes as part of their foreign exchange reserves. They need these reserves to pay for their own imports. This is why they own such a substantial amount of US Treasury bonds, 867 billion as we saw earlier. When a currency is held by many central banks in the world as an asset, it becomes an international reserve currency.
Can any currency be an international reserve currency?
No, you need to have a large, stable economy, deep financial markets, military power, and stable fiscal policies. The US still ticks all these boxes, but cracks are forming under Trump. Currently, 63% of the world's official foreign exchange reserve consist out of US dollar-denominated assets. That was earlier 72%, so the share of the dollar is decreasing slowly. The euro comes second at 20% and the Chinese yuan stands at 1%. So none of them is a real threat to the dollar at the moment.
What exactly are the advantages for the US if the dollar is such an international reserve currency?
The US dollar status as the world's reserve currency means there is a high demand for dollar-denominated assets. This allows the US to borrow cheaply and run trade deficits without immediate consequences. Thanks to its reserve currency status, the US can sustain a much larger debt than most other countries without triggering a currency crisis. Economists call this the exorbitant privilege. It also enables the US to use the dollar as a geopolitical tool.
How does that work?
The US controls dollar transactions through SWIFT and can cut off adversaries like Russia and Iran. The US can just throw you out of the US payment systems. But this is pushing countries to find alternatives.
Countries like China and Russia are pushing for de-dollarization. How serious is this?
It's happening slowly, with more trade in yuan and gold-backed settlements. For instance, China has been paying for its massive commodities purchases from Russia using its own currency rather than the dollar, and it also has signed deals to use its own currency in trade with Saudi Arabia and Brazil. So BRICS nations and their friends are exploring alternatives, but a true shift away from the dollar would take decades, unless there's a crisis.
And if the world starts losing trust in the dollar, things could spiral quickly. Could we see a sudden collapse in confidence? A bank run on dollar assets?
It's possible but unlikely in the short term. However, if foreign holders dump US bonds, the dollar could weaken sharply. A tipping point could come from a loss of confidence in US governance or debt sustainability.
It reminds me of when they asked the famous writer Ernest Hemingway, "How did you go bankrupt?" He answered, "2 ways. Gradually, then suddenly."
Could not have said it any better myself.
Indeed. So, while the decline of the dollar's dominance is gradual, a crisis could accelerate it overnight. What is the consequence for the US if the dollar becomes less important?
That will have serious consequences. Firstly, the interest rates in the US will go up, making the debt less sustainable. Secondly, the US can weaponize the dollar in the geopolitical arena less effectively. They no longer manage the international payment system. This is why Trump is so focused on keeping the dollar as an international reserve currency. If the dollar loses its dominant position, Trump's US debt becomes unsustainable, and that might initiate a downward spiral. He then needs to cut spending or raise taxes.
Fascinating insights, Carly. The US debt and the dollar's role are linked together, and they provide the US its Achilles heel. What should countries do when Trump threatens them with trade tariffs? Take revenge by quickly selling their US treasuries?
No, don't do that. It is not a good strategy to sell quickly and publicly. You might anger Trump, and before you know it, he comes after you. Also, if you sell them quickly, they will lose value and you might encounter a significant financial loss. Just slowly and quietly bring down the weighting of dollar assets in your portfolio, just like the Chinese have done. They sold about 250 billion of US paper since 2018, or you just do not buy new bonds when the US is refinancing their debt. And mind you, we need an alternative. The euro might do, but it needs deeper financial markets. We need one capital market in the EU instead of 27 separate small markets. That would help. By the way, Trump himself is supporting to bring down the role of the dollar. With his chaotic policies, the trust in the US economy will diminish quickly, and investors and central banks will look for alternatives. Maybe gold or cryptos?
Interesting stuff, Carly.
Absolutely, and it's something we should all watch closely.
Thanks for tuning in to Essentials. Like, subscribe, and tell us, do you think the US debt is a ticking time bomb? Drop your thoughts in the comments. See you next time.
Bye.